Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is July 25th, 2012 and we are currently looking at price action on the 10-minute chart. And as you can see, for today there was a strong bullish sentiment in the market. There was this bullish move in a Euro US dollar pair, and there was this rally on risk appetite as investors began to look for yield and put pressure on the US dollar. And this risk sentiment can be seen in both equities and commodities as they rallied throughout the trading day as well. But this move to the upside was really brought on by a few announcements that restored hope to the market. For one, there was news that the Fed is moving closer and closer to providing stimulus to the market, and this could be done as soon as next week, between next week, which would be the first week of August, and even up to September. The Fed could be thinking about providing more stimulus to the market. But this news improved risk sentiment. But there was also statements released by ECB Council member Noani that suggested that it would be beneficial to give the ESM a banking license in order to receive direct funding from the ECB. And this would be done in an attempt to boost the firepower of the ESM, because right now there's questions on whether or not it's large enough to deal with a bailout, if they needed to give a bailout to both Spain and Italy. So then there's concerns and fears over whether or not the ESM would be large enough to deal with both Spain and Italy, and providing a banking license would ease those concerns or those fears. So then this is what caused this risk appetite and this rally up, this bullish bias in the pair. And but for the most part, traders are really expecting some type of policy response from either central bank, either the ECB or the Fed. So then this is really what's causing this move to the to the upside, just anticipation of some type of policy response or some type of move from either central bank. So then today we saw the euro rally 118 pips from the session low here at 20.53 up to the session high here at 21.71, where it found resistance for the day. And we may continue to see more dollar weakness and euro strength heading into the Asian trading session. Right now the pair is currently consolidating below resistance, below this 21.70 handle, and is currently consolidating, awaiting the breakout during the Asian trading session. So if I were looking for an opportunity to enter long or buy the euro US dollar pair, then I would have done so on a substantial pullback to a known area of support. So if I were in front of my platform around the London Open, then I would have placed a buy order at 2083 right here, when price had pulled back and found support at the daily pivot point at 2080. This white line here is our daily pivot point. And what I would have done on this pullback towards the support, I would have placed a buy order at 2083. And I would have placed my stop loss on the other side of this support at 2073, and took my profit when price had reached resistance at 21.45 for about 62 pips. Now you may be wondering why 21.45, and let me show you. If we go to the 30-minute chart, you can see that at 21.45, if we glance across, you can see that at 2 points it served as historic support and resistance. On last Friday, or last week's low, this 21.45 served as last week's low from Friday, and also it served as yesterday's high, this 21.45 area. So then, since this served as both support and resistance historically, this would have been a good location to close out the trade. So then let me go back to our 10-minute chart. So I closed out that trade for 62 pips. But if I were looking for another opportunity to re-enter long, then I would have done so on a pullback towards 21.27. Sorry, right here, 21.27. Now let me actually draw in my Fibonacci right here to show you why that would have been a good area to enter. If I draw in my Fibonacci, you can see that this 21.27 area served as support, but it was also where our 38.2% Fibonacci retracement level was located. So then if I was in front of my platform at this time, I would have waited for this pullback to a known support area to enter long. So then I would have entered a buy order upon bullish confirmation. I would have entered at about 21.32, and place my stop loss on the other side of this support at 21.23, and then took my profit when price had reached 21.63 for about 60, well, about 31 pips. So then that would have been one entry that I could have entered. But as you can see, price made an attempt to reach this high here at 21.71, but it could not break above or break to this resistance, this high up here. And we began to see the pair had began to retrace even further and go through a deeper correction and pull back even stronger. So then you can see that price had pulled back and it actually found support at the 50% retracement level. So then if I was in front of my platform at this time, which was prior to the London close, then what I would have done, I would have placed a buy order upon bullish confirmation. I would have placed it at 21.17. I would have placed my stop loss order at 21.08. And then I would have held out onto this trade and took my profit when price had reached 21.62 for about 45 pips. So then, of course, these were a few entries that we could have entered right here, and right here. We could have entered long orders there. But as you can see right now, price is currently consolidating, awaiting the breakout during the Asian trading session. Now, if price happens to break above this resistance at 21.71, then what we can expect some stops to be triggered up here, which will push price higher, and it will probably test and reach our 2200 psychological level. But not only that, it will also reach our weekly pivot point level at 2108. This whole zone here would have found resistance in this area. So then this would have been our resistance to mark, if price breaks above this 2170 resistance here. But let's say price breaks above our 2208 weekly pivot level. If price breaks above this level, then we can expect price to find resistance at 22.53. So then that's what we can expect during the next trading session. But if price breaks to the downside and breaks below our 21.45 support, then we can expect price to test this 21.27 support level, which is our 38.2% Fibonacci retracement. And if price breaks through this level, we can see that our 100 simple moving average is right there. If price breaks below this level, then we can expect a test of our 50% Fibonacci retracement level at 21.12. And if price breaks below this level, then we can expect stops to be triggered and for momentum to continue to the downside, and for price to test the low for today at 20.53. So then, of course, that's it for our technical analysis review for today. And I will be talking to you guys later. You guys have a wonderful day. Okay then, bye.